Okay, traders. Sorry, I was a bit slow there to get up and running. Having problems with the USB connection for my microphone. So we might have a few people in now. If there's someone in, can you just let me know if you can hear me? Okay. And then we'll get going. So I think the stream's okay. It's a Monday, a long weekend, so g'day John, how are you mate? Alrighty, so welcome to Trade Setup. Anyone that's new, welcome. Hope we had a good weekend, and I hope you are. G'day Pete. Hope you get used to my ramblings. So we've got a bit to talk about today. It's more on the back of talking to one of our traders, one of our subscribers about price action and things, and I tend to forget, if you haven't been following us, or if you're new, I tend to forget what I sort of take as, or what would you call it, not as common knowledge. Yeah, as common knowledge. So it's not, and for new traders, I mean, depending on what you learn and where you learn and how you trade, everyone trades differently, which is fine. But if you're struggling to get profitable and consistent, then it's worth just, listening to what I'm going to talk about. It's mainly got to do with price action and setups and where your risk is and all that sort of the general beauties of trade management, with a bit of psychology thrown in there, because I know it's a major part, whether you like it or not, good, bad or ugly. Psychology is going to be a major part in your trading. So yeah, we'll get into that. So I'm going to discuss a bit of that. It's mainly to do with anchors. I know a lot of people have heard about anchors, so I've got a couple of examples. What I mean by anchors, how you define it, and how you define the trend, and what happens when you get on, you bias the right direction. Where could the market be going to? All that crazy stuff. And that we're trading obviously with Trade Setup. We're trading a lot of shares, mainly shares, but we also do on the Discord channel. There's a few guys and myself doing some intraday stuff, and I base it, even though we're getting, we might be taking different entries at different times. For me, it's based around the same stuff: anchors, price action, and then trying to identify momentum. Where is momentum likely to kick off? I always want to get in early, and I've said that time and time again. Trading's about getting in the unknown when the outcome is less known, but the probability is high. That it's gonna play off in your favour, and rewards are high. So risk reward, you're trying to minimise risk by maximising reward, and that's when you get in the unknown. If you're getting in the known, I've also spruiked this quite a bit, or I can't remember the word now. I've talked about it quite a bit. If you get in the known when it's quite clear, risk is lower, but your payout's going to be a lot lower too. And so you're sort of asking yourself, how many more people are going to come in and into the market to help you to prove you right, or at least give you some profits to work off. So that's all trading is about. It's about risk reward, and it's about that's the beauty of technicals, and that's where your technical skills come into play, and it's being able to put you in the right zones consistently off the right price action to get in nice and early and to get your payouts higher. So yeah, we'll have a bit of a chat about that. Anyone that's new, sorry, I better get into it before I'll tend to babble a lot. So if you are new, you'll notice that over coming streams, I'll babble and I'll get sidetracked quite easily. It's a bit like Billy Connolly. If anyone watched him when he was talking, he started off on one joke and ended up on 3 different jokes in between before he got round to finishing it. So he was great. I loved him. His mind just went off in different directions. Mine's a bit the same. So when you got so much stuff you want to try to get out, at times it's not the best to do it all in one hit, and it doesn't make a lot of sense. So anyone that's new, welcome to Trade Setup. Top left-hand corner, you'll see us at Twitter. Subscribe to us there, or join us there. Follow us there at trade_setup. If you put Trade Setup, I think you get something else. If you put underscore, you get you get us. You get the right stuff. Follow us on Facebook. They're basically going to be the same things, but follow us on Facebook would be great too. And remember to subscribe to our YouTube channel, the bottom right-hand corner, at Trade Setup, capital AU. And you'll find a whole bunch of material on there, probably a lot of what we're talking about now. There'll be all these videos you can refer to. But a lot of educational free material. So it'd be great. Also, if you can leave us a like after the stream, if you like what you hear. If you don't, don't leave us a bad comment, please. Yeah, and we only give general advice, so just remember that. Now I'll get rid of that. What I'll go into first, we'll go over the ASX. Now, I'm pretty sure, like I can't remember from day to day, but I'm pretty sure we were speaking about this last week, what the ASX is going to do, what I think it's going to do, and I think it's ticking along quite nicely. I think it's sort of gunning up for these highs now. We're so close where, and this is what we're just talking about, the known and the unknown. The unknown was back here, even the unknown, and I was sitting around here thinking potential for it to roll over, but if it does this, yeah, it's rolling. If it doesn't do this, it's probably going up. And that's in the unknown too, but when you're talking about now, the trend up is established, it's well entrenched, and it's no longer the known. Sorry, it's no longer the unknown, it's the known. So to me, when I start thinking that way, my risk tolerance sort of goes down, and I'm trying to make sure that I'm managing my risk a lot more on any open positions we got, because when it becomes a known, you got to just think of markets like it's not an infinite amount of people that keep jumping in to prove you right. It's a finite amount of people. So if, for argument's sake, if you've got 100 people going to trade, if you're trading in the unknown, you might be trading with 5 people that are diving in, that might, jumping in, and you've got 95 on the sidelines or 90 on the sidelines and 10 in. But you've got a lot of juice in the way of 90 people to come in and prove you right. When you're trading in the known, there's a good chance that everyone who wants to be is in. If everyone who wants to be is in the market or is at least getting fully invested, there's not much juice on the sidelines to come in and prove you right. Okay, so if you're getting in late, your risk is that the market is set for a bit of a correction, and it has to. The markets will always go, and that's the Dow theory. That's what we're going to talk about with anchors. Market always has to extend, with a trend, for example, extend up, pull back to flush people out, reset at a higher level, and go again into new highs. And it will continually do that, upside when it's going up, or downside between trades, between ranges. The market has to continually flush people in, flush them out, because it's just a case of momentum, and that's how markets work, and that's how and it's not just shares; it's basically everything in the markets, and that's why I'm looking at my price action at any one point is, okay, where are we? Where are we in that likely trend up? Are we extended? Are we running out of juice? That's well established. It could just go through the highs. That's fine. I'll just keep trading up on but I'm always wary. Where's the market? If it's going to break down, what's going to happen? Is it going to be a flush of a level? Which this, if we just get in here, this push down here caught a lot of people off guard. A couple of days, it was coming into a prime level. It was getting extended the way I would view my stochastic. So if you don't know, I'm looking at stochastics overbought for overextended to the upside and oversold to extended or running out of fuel, more of a pressure gauge. I don't like to say overextended either way, overbought, because like I was always taught by Davin, market can stay overbought, and you can see things like this. It was overbought about here, it continued on up, at a pullback, so it just continues on up. The market goes from overbought to not so much oversold, but it continues to pop its way up. It's more of a pressure gauge from buyers. When the pressure's right down, like it is here at the start of Feb, and then you got into a level, I tend to look at that on the upside. When the market is trending higher, it's a pullback, but you just want that confirmation. And obviously with that candle popping down, flushing out some levels and finishing back up above it, there's a good chance we're going to get a couple of green days after that. And we've just gone through into new highs. So the market's ticking away nicely. We're at 51 points at the moment. I still think that longer term we're sort of trading, we're going to be above 7,000. It's only 110 points away. 7,000 probably sometime this week. I wouldn't be surprised, and I wouldn't be surprised if we trade into new all-time highs. The DAX is there. US has been there every day for the last year, just about. So it's ticking along nicely. So that in that respect, we all know the stories behind it with stimulus in the US. Whether right or wrong, whether you think their debts are creeping up, they're looking at, you've got to worry about inflation in the US especially. Inflation will start capping things, but inflation, they're talking about that for a while. It seems to be the market's still well and truly entrenched on the upside, so it's going to take a bit of a, when anything if you're running, the more momentum you've got, the harder it is to stop or turn. The same with anything, markets, the more momentum on the upside. There's more people that are loaded long and keep chugging away to the upside, that less reluctant to sell, meaning it's going to be harder to turn. So things either going to be savage to the downside and they're all going to be chasing the tail pretty quickly, or this thing's going to keep grinding higher because it's sort of brushed aside certain news that you would have thought might have capped things a bit, or at least some food for thought. But people have probably been burnt to the downside, getting out and having to get back in a few times. Now they're just going to hold through a few other things, any pullbacks. So either way, we're going to manage our risks the way we normally do. So what I'll get into now, I just want to talk about especially anchors. All right, so I'll get up. What do I want to do? Let me just get up. No, that's not what I want to get up there. I'll get up the SPY because I can probably draw. I should be able to draw here. All right, so if you don't know what we're talking about, the anchors just your Dow theory. You've got for a trend up, off a level, whatever it is, you anchor. And what we say is your anchor is, that level. That's your anchor. That's your new anchor. All right. But anyway, that's your new anchor there. And remember, the way I define the anchor, if the market's pressed higher, your anchor's down here. Then you got your pullback. Your anchor stays down there. You don't get it after one or two candles. What you get, the change, is when it breaks through that high. Okay, so we've spoken about that before. Once it gets up within the previous high, then you can move your anchor up, and that's just your process of managing your trade, managing your risk, and raising your anchors as you go when the trend is up. Okay, so generally, what you want to see is it power through the previous high. It just continues on up. You raise your anchor and you manage your risk as you go. Okay, so that's the way. That's what I talk about when I'm talking anchors to a trend up. So you have all different price action, and then when it's a trend up, where you're going to, you're going to ask yourself, okay, are we going into a resistance zone that I've defined previously, previous major high? And if so, markets like to go from place to place. They like to go from a bid zone, trend up to an offer zone. If you clear skies, things tend to get a bit stretched. So you've just got to be wary that, this whole time when we're raising our anchors or managing our risk or defining our anchors, where I'm always looking for where the market's going to go. Is the market stretched? Should I, does it still look strong? Or does this particular stock look strong? Does the Hang Seng that I trade intraday look strong? Should I be, taking some risk off the table, especially into a level? What's the bigger structure saying? So this structure here could be the daily, like we're trading a shares. GMA is doing quite well today. We're trading that, and it's based sort of a lot around the weekly structure too, because the weekly structure all we've had is a bit of a push higher, and then it's had a bit of a pullback here. We've done something like that, and it's looking like it's strong again. So, but within the daily, you've got that leg up might be the same. You get your pullbacks. Higher highs, higher lows on your daily chart, and then it starts to break down. So that trend up is starting to break down, but it's just a pullback on the weekly. Okay, so we're always looking at different time frames, and I think if you got you got trading time frame, then you've got a reference time frame, maybe one up. If I'm trading the Hang Seng, I'll trade off the minute chart. I'm sort of going for my 5-minute moves, and I'm using the 30-minute chart to sort of reference that bias of the momentum. When you're trading shares, intraday, it might be the same, or it might be different if you're trading more of a swing trading approach on the daily basis, or you might be looking at your weekly chart for that trend up, and you're looking for that daily entry, and then just trading however you want to trade off your daily charts. But that's the idea for anchors. Okay, so your anchor doesn't form. So if you're up here and the market's pulled back, okay, and we're about here, and that's your recent anchor. Okay, so anchor's down here. We've gone through this high. Okay, we don't lift it, so that leg up could be extended. And if it's on the daily chart, you might have your 30-minute or your hourly charts looking a bit extended here, but your daily is, pressured higher. So we're looking for that daily pullback. We've got the daily pullback. Now, as soon as it starts to go back up again, my anchor doesn't raise from here to here. My anchor will only raise when I'm getting up near the highs, because we've all seen it before. We've all seen the market, will pop up, build a lower high, come back down, and then start to reset. And I draw that pattern up quite a bit. So that's your anchor. That's your leg up. You pull back. It might bring a lower high, and your lower high comes in because what it'll do is forcing people back out and putting them back on the sidelines. But your trend, because your anchor's still down here, your trend has not changed. Okay, so that's your most recent anchor. When we're talking the market's trading in yellow, that's your recent anchor to the trend up. We've had, instead of just continue on straight up, we've had a deeper pullback just to flush out more people, and then we reset off a higher low. Okay, and the market's trending back up, got back up to the highs, so all of a sudden our anchor moves up. Okay, as soon as we get back up to the highs, into this high here, gets back to the highs, within a few percent, say, I'm happy to raise my anchor, tighten my stop up. Now, I might be tightening at a few cents. I might be tightening a couple of dollars. If I'm trading the Hang Seng, it might be the difference of 5 to 10 points, or it might be 50 points. You don't know. Okay, but that's the way you're trying to follow the trend. And then you're also trying to assess when it gets up to different levels. If it does sort of push through and then starts to, and then we start to sort of fade off that level, then I'm looking for here, they go, maybe this is a double top now. And I'm just trying to assess momentum, a strength at any one time. Okay, and then you might get your lower high come to play, then you have to start questioning it. Now you've got a double top, you've got your lower high. Are we going to, so once I get my lower high off a double top, for instance, I'll be gunning for that. My thinking is that the market's going to be gunning for that most recent high low, potentially flush it out before they either reset or they start to go into a downtrend from there. Okay, so all these sorts of things you're trying to assess as you go. So that's getting a bit too deep. So what I'm really trying to stick around this idea or concept of anchors. So we'll just go through an example. This is on Galaxy. So we'll start off with a share. Actually, no, I want to start off on the Hang Seng. That's not going to mean too much to you, but what I'm looking at, I'm going to focus in on, is this action here. So on the daily, you can see, we've worked off this lows. We've had a nice little trend up. And you can just start looking at these anchors. Okay, so if you look at, this was a nice powerful move up before we had really any change in trend. Okay, so if you're looking at this as just one leg, you've got minor anchors on a lower time frame. You're just looking at, say, something like this. And you see, if once you start marking up, you see the high highs, high lows, then we get to about here. Okay, so that's one leg up. We haven't had a key pullback. Then we start failing at this level here. Can everyone see that quite clear? Yep. Pretty sure. I'll just move that. And I'll do that. There you go. That's probably better. Then you start failing at this high. So what you're going to do, this is just what I said a second ago. Once we start getting up to the high and we start failing, you're probably going to go back and test the most recent anchor up, which if we just expand on that, we did. We broke that anchor to the uptrend. Okay, so now we're thinking maybe this uptrend here is going to run out of steam. We're going to go into pullback mode, or are we going to go sideways? As it turned out, the market just turned around. It was just a flush of that level, flush of the anchor, squeeze out a few of these late traders and turn around and head back up again. Okay, so now you've got that leg up and we're starting a new leg. Okay, with, I should be drawing it in a different color, but then you've got your more of a major anchor here, more of a major anchor here now, and you've sort of got that trend up. Okay, but what we're looking at now is the market start to roll over. So in context of all this move, this is one leg up, this is one pullback, and then we're going to that secondary leg. So we're trying to analyze when the market's turning, and we're just going to try to break it down on a lower time frame chart for those anchors. So what I've got here, I think that's it there. Yep. So these two blue lines are the same period. It's this same period between these two vertical lines. Okay, and I've just I'm using a line chart just to help you see how anchors work. All right, and just remembering we've got this little pullback, we've got this little pop up here. So in context of this move, this is a downtrend. So it's the first kind of pullback we've had of this leg up, this major leg up, first pullback, and then we're going to go into a rally again. But what I'm trying to analyze is when we start to roll, what's the characteristics of a market when it's starting to roll over? And this is on a 30-minute time frame, and the previous chart was a daily. So we're going into finer detail of that pullback. And this is how you try to, when you're trying to analyze your pullbacks, or when a market's trending, you can drop it down a time frame to get a finer detail. But exactly the same process of trying to find your anchors, of analyzing your anchors, you go about the same process. All right, so if I just now we're in a pullback mode, so you can't really see on this move down any real anchors that stands out. It just on the daily basis, it's just rolling over. You had a bit of a rally up here, but that on a daily chart, that's not breaking any anchor. It's just a bit of a pullback. It goes down, it keeps going down. Okay, but on a 30-minute chart, it's a little bit different. So we've got the highs up here. You can see the market's pressed down. We've had a pullback, so we've got an anchor here. Then we've had a bit of a leg down here, bit of a pullback, another anchor there. And you sort of got these minor anchors as well, another clearer anchor here. Okay, so when we get up to about this stage, that leg down is going from the unknown, when people weren't certain that it was going to roll, and you've broken down. The key thing is we've had this push up here. We've broken down through this support zone, and that's probably your anchor to the uptrend on your 30-minute chart. Just say it is for argument's sake. Then we've rolled over. We started to hold a trend down. Okay, but don't forget on the daily chart, it's just a pullback. But either way, it's tradable on the downside as well. And we're looking to be short. We're trying to be bias short. So what I'm trying to do by defining my anchors is also trying to define my bias. If I'm going to be biased up, I want my anchors to be supporting a trend up. If my anchors start to get attacked with a trend up, I've got to change my bias. I've got to either change my bias to go sideways, or potentially look in the selling opportunity, or locking in some gains. Now, if you're just a buy and hold, you don't sell, then fine. Then it's probably a time to get out, reassess the action. If you start to get anchors holding a downtrend. Okay, so that's what we're trying to do. We've got our move up. Now we're starting to hold a pullback because we're holding the anchors to the downside. It was about here. Okay, we've got this consolidation zone through here. Actually, I probably could change it to a candle chart. It might be a bit clearer. We'll do it in a second. We started to expand down. We popped back up. So here you would expect another continuation down, but we haven't broken that anchor. Okay, but what happens from there is the first real time that it's actually consolidated. So you had a good pullback like we have before. We pulled back, fell over. We pulled back here, fell over. Here, bit of a pullback, fell over, made a new low. This is we pulled back, so you're expecting exactly the same thing. You're expecting this market to just fall over and continue on its way down. If I can draw that. Okay, so that's your expectations. But instead we consolidate and we break to the upside. So all of a sudden, once you start trading up through the anchor, you know that anyone sold short through here, short, is going to be put under pressure. The market is going to start to turn, potentially start to turn, but that's your bias now from being biased down because you've broken your anchor to start to be biased up. Okay, but you don't know obviously where it's going to go to, but you're going to be biased up around here, just starting to change your tune. Whether we roll over, retest the lows, we don't know. As soon as you start holding a higher low, you're sitting on the MAs are up. Okay, we're going back into a bit of a buy mode, and then really you're looking for that major level where the market could be attacking, which to me should have been right back up here. Okay, but instead the market's rolled over again. You can see, anchor to the uptrend, probably bring that right across. Retested the previous anchor, continued on higher. Probably another little anchor here. Then what it started to get, we got this resistance coming in, broke anchor again through here, then we started holding lower highs. Okay, so we are holding anchors to the downtrend. So this is what I'm doing time and time again, intraday especially, just defining that trend. You start to break an anchor. You know that when you break an anchor, that's the most recent lower high. People have sold it there. Okay, as soon as you break that, whoever sold it there is the first, first line of defense that's going to come under pressure. Okay, to keep that downtrend intact. As soon as they come under pressure and they hit their threshold, then especially when you come off a higher low like here, they hit their threshold, they close out, they have to buy back. In this instance, after that they're sold in here, they have to buy back in there. And then as you get a bit higher, then you've got sort of that next anchor where people are generally going to hold their stops above there. They don't want to see, they start to see this market is not continuing on up. You're either going to go into a major correction of that, move up, major correction, or it's going to retrace all the way back up to the high. So either way, you're going to be on the defensive there. You've gone from attack when it's going down to being on the defensive. Okay, so that's how I would, define my anchors, define my trend, and obviously I'm trading this back up until that anchor breaks, and that anchor breaks, I'm looking for my shoulder. And that's why I find that shoulders are very, very important too. And as we've spoken quite a few times, for instance, here as it's come down, we've consolidated. This consolidation, this breakup doesn't mean that anchor's going to hold. You could come back down, back through that anchor level, retest from underneath and roll over, and it was just a bit of a blip, something a bit strange. But when I'm trading off of shoulders, it keeps me out of that kind of move. It's your first pullback. The first pullback starts to stick. It means that I'm not the only one seeing that price action. I'm not the only one willing to jump in and support it. And there's more buyers than sellers, basically, and it starts to head back up. Then I want to get involved in the action because I think then it's going to start attacking your different lower highs. It's going to potentially attack all the way back up to the previous highs on a major level. So this is your pullback on your daily chart. Don't forget, we're starting to go back into an uptrend on our daily chart. Potentially, we're going all the way back up to these highs up here, and that's why I'm getting long, and I'm just going to manage my risk as I go up. Didn't get too far before we rolled over, but you can see how it break the anchor. I could be stopped out there. I might be stopped out as soon as we get a shoulder in here off a double top, but I want to make sure I'm trading around my anchors. So you got stopped out here. Wasn't long before we got another shoulder to the downside, and you can trade short. Okay, you're just flipping this on its head, and you're doing the opposite. You're selling short. This is a move down, bigger move up. And this is back to your daily. Maybe we're going to have a bigger move down that daily chart. Okay, so all these things are going through your head, and then you're just following your anchors down. Okay, so you can see in here, that it's starting to get a bit more volatile. Anchor to the downtrend. You can just see it's just those pullbacks. We talk anchor extends, pulls back, and generally stick to the rule of thumb. 1/3 to 2/3 of that move down is roughly where it's going to pull back. This is roughly 50% pullback of that move down. Then it extends. Okay, 50% pullback, then it extends, and it starts to get into the lows and run out of puff. You can see this didn't get through too far, but, below the lows, if we can spit that out, before we had a deep correction back up basically to the anchor. Then we drove down there again, retested it, and we started to push back up through the anchor. So about at this stage, if you had a bigger short position on, longer term from somewhere up here, and you managed to hold it, for instance, you're going to be starting to think, look what's happening here. All right, and starting to assess the action because it's broken the anchor. So as soon as it breaks the anchor, I'm thinking of sideways range bound action, consolidation, or I'm thinking a change of trend. Okay, from this change of trend from a downtrend to an uptrend, or it's going to consolidate sideways. Lo and behold, we start to hold this inside level and start to rally again. So does that make sense? Just what I'm talking about with anchors and what I see happening. I've got another couple of good examples here. We've got a Galaxy just before you just get ready to put in some charts. So Galaxy, you can see if we just go ahead and mark up, I was going to start from here. Mark up the anchors. This is a trend up. That to me, your anchor to the uptrend. And you can see all this sort of rubbish here. You can see as we've moved up, we've had a decent pullback, and it's not these little candle. It's not because you've got a red candle, that's a pullback. This. I'm going to keep making probably things complicated, but that could be a minor pullback just for this leg. But these are the bigger moves I'm interested in when you've got a couple of red days and it's had a good pullback back to the MAs. Another extension high, and you can see that extension through this previous high wasn't. It didn't kick on very high. Okay. And then you've got a pullback, and this is what I talk about, knowing your anchor. So at this stage, the anchor's down here. Okay, and I'll just bring it back. At this stage, the anchor's here. Okay, you got a pullback. The market pops up, it gets a lower high. So if you're long from in here, you really shouldn't be closing it until you break your anchor. Okay, there's times when, I muck around that rule a bit because there's times when the market itself is well and truly stretched, or the market itself, so the ASX has broken an anchor to the upside, it's potentially going to head south. I've got an individual stock that's still looking good. I might want to tighten up my risk, and I might just, I tend to fluff around, especially lately because I don't trust the markets, but generally, technically speaking, you shouldn't until it breaks that anchor. Or you sell into the next lower high, or you can just sell when it breaks that anchor. You just call it a day. But you can see it's retested that zone. We've headed back up and it's powered through those highs, and then we come screaming down. So that anchor is still in play. This I don't take as an anchor. This is an anchor to just this leg up, okay? So if just that leg up, yeah, I could put my anchor just in here, okay, below that low. Does that make sense? But as we can see, this is the anchor I'm talking about. It's in play. The market's come straight back down and retesting it. So if your theory is it's going to keep going up, those 3 or 4 days of red candles, one after another, should not happen. And then it's broken the anchor, and then you can start to see we consolidate sideways. I call this, it's holding that sort of a range band action from there. So even at this stage, we don't know if it's going to, this is a, your leg up, a major leg up from here to here. That's a leg up. That's a major correction. We don't know at this stage. We'll just go from here. At this stage, what is going to happen? Maybe it's going to go straight up through, back up through again, and start holding high lows and have another trend up like that. And this is a key. We're on a daily chart. This is a weekly pullback. It's just a simple pullback on a weekly chart. On a weekly candle, that might be one candle made up of however many days, well, probably 2 candles when you've got 20 days there. A couple of candles on the red side, down candles on the weekly chart, a bit of a fluff on the daily, and then we start going sideways. So at about that stage, you don't know what's happening. Okay, then we start to chop around, pressing down. So we're sort of range bound still at this stage. And then we start to get this action in here. I'm starting to think that potentially this market could be going up. Okay, we're starting to hold sort of an inside level just above. But for me, I'm not too certain because we've held inside levels before, popped down, popped up. What I want to see is really a key move either way. If we start to hold, we're going to hold this, we may pull back and then hold and then go. And then I'm willing to take an inside level, but the anchor is still holding. So this anchor's broken, but we're still consolidating. We don't exactly know which way we're going to go, whether we're going to break to the upside or break to the downside. And as it turned out, this held as a lower high. We start to break here. It breaks down. We've now got our first sort of sign that we're going to hold anchors to the downside. Your most recent level to worry about is up here. So if you've been shorting it, for instance, off this shoulder, and we just started to break through that anchor, great. And then what could have probably been a prime trade because we've broken through that low. This is really your first, well, that's not really good. This is your first level, which is the first pullback after breaking to the downside. That's holding a lower high, and then you're trading, to the downside, and you're just going to follow your anchors. So you've got your shoulder, and that's what I was saying. When we talk about shoulders, it tends to keep me out of trouble. Like if I traded this, for instance, as a shoulder, I might have traded this one as a shoulder, come down and turn around and squeeze me straight back out. I might have traded this as a shoulder, come down and turn straight back out. The difference here is that it hasn't really broken down yet. Okay, it was looking okay just here, but as soon as we got this leg down, it breaks through that support zone convincingly. Your first pullback starts to hold, and you're anticipating it's going to continue down and we're going to trend down, then I'm happy to go short. Okay, and you can see it just sort of continue to grind its way down after that, holding anchors the whole way down, anchors in here, maybe an anchor in there, anchors to the downtrend, and it just continued on its way down. Okay, until that leg starts to become a bit stretched, you get some form of retest and fail, and then the market starts to find a bit of buying and starts to break the anchor to the uptrend. An anchor to the downtrend starts to retrace its way back up again. So does that make sense there, guys? There's one other. So start putting in some charts if there's something you want to look at. Even if there's something you're questioning, how would you mark up the anchors on this or this? Whack it in there. Linus is another one where it's a good sign that probably not here. Linus was sort of chopping around here. We've got this bit of a sell-off. It looked like it was going to continue, but instead we retraced quite a bit. We started to hold this level in here, which this zone through here, and it's the same as we just discussed. Which way is it going to break? We've had this leg down, so at about here, at this zone or this area or this time through here around June, July, you can't be certain it's going up and you can't be certain it's going down. I mean, the bias is the MAs are starting to roll up. We're starting to hold those MAs. So there's a good chance that it's going to pop up. And you can see this candle here is quite good. It pops up to the upside, rejects, then we start to find some buying at a higher level. And so for me, I would box that up with a break through that high and my risk below, knowing that we're starting to come out of that that consolidation zone to the upside because we've broken out. That's our first pullback back to the MAs after we broke out. It's holding a higher level. We take a breakout to the upside, we risk just below. So it's as simple as that. Okay, and then that's overall going to be your anchor to that uptrend. Okay, so you had to move up, pull back, consolidation. It sort of breaks this minor this trend up here. Really didn't break until we got this move down, and then we went into consolidation. So we don't know, like we were just talking about with Galaxy. Where was it? Galaxy back here, whether we're going to break up out of consolidation or break down. Galaxy broke down, but when we go and look at Linus actually broke up. Okay, so to me, I think it's good to know where you're going to be proven wrong, and anchors do that. So anchors are generally hold when people are happy to buy at higher levels, and you know that if they're buying in that to produce that anchor, the risk for them is just below. If they bought nice and early in the trend, they've got a bit more wider risk they can hold. But generally, markets will start to break down when they start attacking anchors, okay, or it starts to at least consolidate or change trend. But either way, you'd expect if it's an uptrend and the anchor breaks to the uptrend, something's going to happen on the downside. Okay, now Linus is well and truly established to the uptrend. For me, you can see it's quite clear. There's an anchor here. That was a good long stretched move here through here. So you can see it pulls back, makes a lower high, retests there, and takes off, takes out the highs. Okay, anchor. Decent pullback, sort of into the same zone, starts to go up again. This is really all one big move up, expansion up, has a deep pullback straight to the MAs, starts to hold an inside level, and then goes again. Now, this is a prime example, just to get diverted. I call this an ICT, inside continuation. Well, that's what I was taught at, what it stands for, inside continuation trade. So when you got the trend is up, pulls back to the MAs, it pops up, it could be a lower high, it comes in, back to the MAs, you get a few sellers jump in, and it turns around and squeezes them straight back out. If you're looking at a new trade just in, that was a prime breakout. Okay, normally you probably wait till it breaks to the top side with your risk just below your anchor, but that's a good little, like I said, inside continuation. It's a good little setup where the market wants to, at least attack those highs. Okay, so that's one thing to keep in mind. Yeah, will do, Joseph. No worries. So does that make sense, what we're talking about? I haven't really got any more examples, but if you just go through and flick through some charts, I haven't really got anything I want to take note of. That's pretty much it. Let's just look at those Galaxy I was talking about. Well, Galaxy now is holding this inside level. Now it has to hold that level. Okay, so if we're talking about anchors again, this is what I'm always saying. I don't want to buy on that level because I haven't got confirmation that, say, for instance, actually, I'll just undo that. I'll go back to my other platform, Galaxy. So this is the level I'm talking about. So if you're looking at this going, I know I talk about flushes. That's a flush out. Okay, that's fine. It is because it sort of flushed the previous low, which is here. Flushed that, went back above, finished above. It's still heading down at the moment. So if you're just looking to buy that off support, you've got no confirmation that this leg down has finished. So that's why I think a lot of people, if you can just sort of look at anchors to a trend up or down, and your shoulders, if you combine those two, a shoulder off an anchor, for instance, if we get something like this and this starts to hold and I start to get this action, a pullback, and it's above this level and that pullback starts to fade well above that level, and I'm looking at that, so I'm anticipating that's going to be a high low, I call that a shoulder. My risk, well, anyone that's sort of selling in there, the risk is it breaks back through this high. Okay, so at this stage, right up until you got the market turns about here, say, well, move that across, until it turns back up again, at this stage, even still, you don't know if that market's going to break through this low or not. So if you're buying off this level, there's a chance that it just goes straight through there, you go to lower levels, you start attacking this mark down around $2, because that trend up is being well and truly, we're in the known at the moment. So to buy off that level, I would really want to see a higher low play out, because a higher low plays out means buyers are still happy to step in at a higher level. Still quite strong trend. There's still quite a lot of buyers in the pipeline to come in and prove you right. You buy off the high low, and then your next port of call is obviously up these highs around 330, and see if you break. If you start to fade off those highs, then you might want to call it a day. If you break straight up and through, then you just hold and manage your risk. Okay, so I think shoulders is another key part, and you could see even in here when we've got this zone through here and you've got this high, market sort of went consolidated, then all of a sudden you've got this inside level that starts to form, and you've got this little, what do you call that, triangle. Can everyone see what I'm talking about there? That triangle starts to hold. See, there you can probably see a bit better here. This high starts to build off, you reacted off there, and buyers are stepping in at a higher level. So when buyers start to step in at a higher level, to me it's going to be quite clear that if it breaks through that high, it's going to trigger a wave of buying. Okay, and then I know where my risk is, I know where I want to get in, and then from, like I said, from there on in, you're just managing your risk. But you can see again, it's off a high low, so I think, or off a shoulder. I think that's going to be a key part in your trading if you can keep an eye on that. All right, so let's get into some of these trades. So I hope that was helpful. There's probably a few points that I wanted to talk about. AVI, that looks great. I've talked about shoulders, I've talked about higher highs, higher lows, but there's sort of a key basis for my trading, and obviously it gets a bit finicky with entries. You get a bit more in depth with that with price action, but that's sort of your key. If you can start defining your anchors, where will people start to come under pressure, because you know there's going to be stops. It's quite clear, and don't get too complicated with your charting either. Your anchor's not really below this low, or it's below a sort of key level. You had a couple of green days up, okay, that's the market's moving up. A couple of red days down, it's moving down. It starts to rally back up, your anchor's probably going to be down here, breaks through the high, okay, your anchor's here. All right, so if you can define that, you can start structuring your trade around those anchors, and when you're biased up or down, it sort of keeps you, what I think it does is keep you on the right side of the market, as in up or down. Okay, if you think you're coming into support, just exactly that we were just talking about on Galaxy, we're coming to support here, and you think, I'm just going to hold the MAs. You don't know that. Okay, we know this is an anchor. It's attacked it. It's flushed it. It's retesting it again, but it's still coming off. These moves down are still lower highs coming in on a daily basis. A lower level, lower level, lower level. We're not proven right until we start to get that shoulder. Okay, so once we start to see that shoulder form and it starts to form a higher low, then I'm happy to buy it. Okay, but until then, I'm not going to buy there, because we could see this market, press down, goes back up, tests it, and goes down to a lower level and completely capitulates for whatever reason. Don't care what the reason is, but that, up until that stage when we start to get that hold, I know where my anchor is, I know what level I'm trying to work off, and then I'm just trying to structure my trade around that. Okay, like I said, off the shoulders. So let's talk about this one then. That's not what I want. Just get my little drawing tool up. I'm probably not going to get through a lot of. It's obviously got a bit sidetracked there. So this one here, you can see, okay, high, big lower high. So this is kind of all the moves you're looking at. Then we start to go up. We're still at a lower level than this, but what you can see is that market's starting to find some buyers. The lower we get, the more buyers are stepping in, and the less sellers that are stepping into the market, starting to run out of steam. So it's becoming, like I said, that move down, when it starts to extend, it's the known for the sell side. It's obvious that it's going down. So you run out of sellers and buyers start to nibble. Okay, until they nibble enough that it starts to pop back up. Okay, then it gets back to here. Buyers stop nibbling. Sellers start to go, look, I didn't get out here. I was long. I didn't get out here. I saw it come all the way back up. Looks like it's going to fade again. I'm taking a smaller loss. Okay, and then they start selling it down until we get that same process. The market heads down. back into the lows, just gets through, gets a bit extended, starts to use up all the selling pressure, buyers start to take a nibble until they can start to find a base and lift it back up again. Okay, so that's just the process that's happening time and time again. And if I just clear that up, until you start to find where they're consistently holding a level, okay, then you basically, it's off this level here, that's higher than this zone through here. Okay, so what are we doing? We're just trying to mark up all our key levels where we might find some some action or reaction. Right, so as we can see, this is kind of really the first level that it's tested. It's come back down and tested at a higher level. Didn't do that anywhere in here. Didn't do that previously before. This move down, like was this move down, just went straight through the previous lows into a new low. Okay, then we got a new lower high. Comes back down. So in anticipation that we're going to take out this low in here, sellers were coming in, they were giving up, and then the market started to pause a bit higher, meaning buyers are stepping in, they're soaking up that selling pressure just below 10, starts to chop around, and it starts to lift. So we know that we've got a higher low, okay, just below 10, and the market's lifting off that, and that's compared to say that 5 cent, 4 cent level in here. Okay, so if we can mark that up here, we've got these are the two lows. I don't know why that makes it so big. These are the two lows. Oh, come on. There we go. These are the lows we're talking about. Okay, so that's your low, that's a higher low, and the market looks like it wants to press higher. Okay, so then we're working out what's happening, just that move off there. So we've marked up to this high at say 26, 27. We know that the market's pressing higher. That's our next port of call. We might find a reaction down, or it's just going to drive straight through. We don't know yet. Okay, but if I was going to trade this, it's quite clear you'd have an entry. I'll just sign that. Look, I'll just give me one more second. I'll make this a bit bigger. Whoops. Bit more price action. Whoops, bit more price action, something like that. Okay. So we just got the right hand. So we're just going to look at this sort of area here. That for me, I'm just going to mark up that level again. That's my first port of call where I could have a bit of problems. If I'm the outside, that's my higher low. We're talking about just below 10. And there's that other level that's around the 5 cent mark. We know that we're holding, that's a new anchor to the uptrend. We're pulling back. So at the moment, we're probably just confirming this new anchor. Okay, so if I know that's my anchor, I want to buy on that break. That's fine. That's a trade. You're off the MAs. Your risk is just below here. You boxed it up. You buy the break. I would prefer to buy the break through there because I don't know if it's going to fail off that. It's failed off there before. Could fail again. I don't know. But if we get to 23, there's a good chance it's going to continue on because you've got a leg up, pull back, leg up, pull back, leg up. Okay, so if I buy that, I've got my risk below. Where's it going to go to? There's a potential. That's what I was marking up this high before. Okay, so there's a potential it's going to find a bit of steam or a bit of selling pressure up at around 27. So you have got a trade where you might be in profit and then turn around and get stopped out, or you might not. It might just continue to barge through. And that's why I was marking up this key higher low before, because generally what it means is, no, I just want to do this. What it means off this high low, that's your move up, that's your pullback, and we've got another move up. So why I'm marking up that higher lows, because I can extend potentially through here, and then I'll just draw it up. I'll draw up what I'm talking about, so I'm probably going to confuse everyone. That's why it's important to mark up all your levels, what you see. And I talk about volatility projections quite a bit. So if I'm going off this low, that's my higher low that I'm working off, a key high low. So I know part of this trend, I'm looking for this sort of move up. That's the extension. So I'm looking for the same sort of move up, which would take me above that high and start to looking at this high. Okay, so if that's the case, it makes that trade from a risk-reward basis a little bit clearer, a little bit better than falling short. I mean, it doesn't mean it can't fall short here. It can't fade there, but it looks like it's a good chance that it's going to extend that move. And even if you take this volatility projection off this high, it's probably going to take you through this high anyway. Okay? and potentially up to that 35 mark. So if you're trading at around 22, 23, you might have a 5, 6, 7 cent risk, but you've got more like a 14 or 15 cent gain. Okay, potential. So your risk reward could be 1.5, 2 to 1. Does that make sense there? All right, so that's that one there. We'll just try and whip through some of these others. So I thought I'd explain that one out because it looked good. Look, this one here, BRV, always going to go back to the weekly. What's the weekly saying? It's in a downtrend. That weekly is still in a downtrend. You've got a major anchor holding the trend down, but you can see it's obviously quite clear that it's running out of steam. So we're looking now at the daily. Okay, so since 2019, did nothing really that year. 2020, bit of a sell-off in, was it March, like everything else, but then started to lift. This is the action that's really good. Okay, and you can see that. Extension, to me, that's contraction. And if you've got contraction, next thing's going to follow contraction is extension again. And if it's off potentially this high low, then up we go. Okay, if I mark that up now, I could just do this. Okay, you can see quite clearly lows and highs are holding. It's up until about today where it's just started to break. Well, you could have taken a trade probably today with your risk just below here, but I would rather see what's that first move, because it might pop up and then slam back down. I want to see after it breaks out of this contraction. This is the contraction I'm talking about. So that you've got contraction, expansion, contraction, and we're anticipating expansion again. So we're trying to buy it nice and early when the market's going to go back into expansion and potentially at least attack these highs, if not higher, going through 10 cents. So that's why this zone is so important, because it's nice and early. We come out of contraction. There'll be, as soon as it starts to break, there's going to be a lot of people who will be looking at that going, oh, hang on a sec, we're starting to expand back up again. I might want to take a long and see how it goes, basically, and manage my risk. So here you could have taken it, like I said, taken a trade today. Your risk is around 4.5 cents from, say, 5.5. You're broken out, but the good thing is I normally wouldn't do that, but we've come off a higher level. Okay, so then you just start marking up your levels. Go, what happens at 6? Go straight through there. Okay, let's not worry about that. What happens at 6.5? May fade off there, because what you could do is have this move here, fades at a lower level. So as soon as it fades at a lower level, you're kind of doing the reverse to those volatility. So what I'm talking about is if it's coming contraction here, and that's kind of our lower level we're talking about, if it pops up and starts to fade, all this leg down, which is all this, starts to come into question. And if we're measuring that out, let's talk about from high to low, we're going from high to low, and it's going to take us somewhere back into, this level, for instance, if that's a possibility. That's what I'm saying about just making sure you're understanding where your levels are. If it fails at a key lower level on this little pop-up, just be wary. Okay, but either way, I'm probably going to have to clean all this up now. The market is, we've got expansion, contraction. It's starting to come out of expansion. So really, it's a matter of how do you trade? How do you enter a market? This is probably a prime zone, which is starting to build. I would be probably looking for a bit of a pop-up. Get the MAs moving back up again. What's the first pullback to the MAs? And then buying on the rise again. And buying on the rise when I'm going to be targeting up to potentially 7.5 and above. Okay? But it's a good one. That's a nice one. Joseph, MEI, same sort of thing. You've got trend up, and I know this is going to help you if you're looking at the anchors again. Just starting from left to right. Obviously, this is your move down. This is our move up. Where the anchors, we'll draw those up. This is all probably one move. Anchor, you can see, presses up, pulls back, retests the anchor, goes again. Probably an anchor, not really in here. I would say this one's the anchor because it fails at a lower level, pulls back and goes again. So it's your major anchor. We're anticipating that the market's going to produce another anchor, and that's what we're trying to look at. It's an uptrend, we know that. MAs, 20s above the 50. It's back to the MAs. You've got this kind of choppy action on the way down, cleaning out a few of these late buys, and we're looking to, basically for a reason or an area to buy into. All right, and we're just doing what we did with this, with the last one. What was that? BRV. Or BRV. It's contracting. This is expansion, contraction. Same expansion, contraction. That's contraction, expansion, and so on. You expand, you contract, you expand, you contract, all the way up. So we're in contraction. We know that because we've got these little minor levels. Its anchor's still in play. The market is still technically in an uptrend until the anchor breaks. And we're looking for this zone here to be another anchor, potentially, and we're looking to take a nice early trade. You could wait till it gets up through through these highs, buy the break, stop below, or you can buy like an inside, that's your move up, ICT, that's your pullback, here, you get a little pop up, high low in here, and then you buy the break of that high low, that's the ICT I was talking about, and then, seeing how it goes. I'll just mark that up. Okay, does that make sense? So I think that's a good little setup. So this one here, it's still in an uptrend. You're just looking for your entry. And if it fails from here, if you're just buying here because you're buying when it's pulling back into the anchor and nothing's proven itself just yet, there's a chance that this is the top. Because don't forget, we've been up here before at 8 cents and failed off there. Okay? So for instance, if you're buying it here, you're bought into this level. I'll mark that up. Say back here, we're looking at it from here. Okay, so this is what the information we got. We don't know this is going to happen. If you just buy into a support zone, you put your bid just below the market, you go, all right, that's it. I'm going to get in about here. The market's going to bounce again. It's going to head its way higher. It comes in, you're looking good, and it comes and breaks straight through, gaps down. You're under all sorts of pressure when it's moving down. Okay, that's why I'm always looking for that shoulder. The shoulder. If I was looking to come in here and I bought it here, it popped back up, I wouldn't buy it. But if you start getting the shoulder, then I know that I've got my higher low. I know that this level's a confirmed level. There's no more sellers coming in, and there's buyers stepping in off that level to try and move the market higher, and I'm buying on the rise. Always buy on the rise, sell on the falling, if that makes sense. Okay? And use your shoulders if you can. That's from a technical perspective anyway. That's just the way I trade. I was going to look for a code, PLZ, HP. And so to me at the moment, this is more of a range. So all I'm seeing here, this market's roll over. It's sort of bounced. This is the anchor to the downtrend. Okay, that's your move down, your most recent move down. So if we work left to right, and I'll draw this up. Not the wrong one. I'll draw this up for you. So this is what I'm talking about, the anchor to the downtrend, because you've come off a clear high. Okay, we tested a few times. And that was your move down. Okay, that was sort of your anchor at that, well, potentially, just looking at the left-hand side of the chart. Anchor, move up, held the anchor, retest, couldn't get up, then failed, pushed through the anchor, pushed up, committed a lower high. So you can see if you break that down, that's one move down, that's a pullback on a whatever time frame, we're on the daily, and that's your move down. It's your secondary move down. All right, but this is a key level because we haven't really tested it or put it under pressure again. Okay, so what I'm looking at is either we're going to continue to hold that trend down from this lower high at 220, and we're going to start to attack this inside level and then back down to $1.30. We don't know that just yet because we haven't really. We sort of pushed down, popped back up, gone sideways, chopped around, and we're holding two inside levels. So this is your bigger range between here, and this is a narrow range between here and here. And we haven't decided, are we going to hold a lower high, which is here, or are we going to hold a high low, which is here? Let me just do those in two colors. Does that make sense? The market has not decided that just yet. That's your lower high. If we break from here outside that way, then bulls are in charge. This lower high is going to hold, and we're looking for buy opportunities. Buy opportunities anticipating this level is going to break at 240, and we're heading back up to these highs. Okay, but if we hold this level at 220, we start to break to the downside. Maybe there's more pressure to come, and you're looking back down to $1.20 and below. Okay, so for now, we're in a range. We're trading in this range, and I'm not I'm not convinced in which way it's going to go yet, because we are holding at this stage a lower high and a higher low, and we're coming off this sort of weakness. Okay, so if we just have a quick look at the weekly might tell us a different story, or which way. So at the moment, what I'm saying from that daily is that I'm unbiased. I don't know which way to go. It's as simple as that. And if I don't know, I'm not trading it. You know, if you're not convinced, or you haven't got enough data that's stacked up in either direction, just don't trade it, because otherwise you're gambling. It's pure gambling. You're not putting any probability in your favor. Okay, so if I now flicker back to the weekly, okay, this weekly, although is a better picture, I'm going to go to the other chart so I can get rid of that. What's it called? RHP. ASX. So forget about the daily now. When you go to that weekly chart, why is that completely different? I probably haven't got enough data there, have I? There's a good chance that I've got that last bit of data. All right, but you can see what I'm talking about. It's obviously, it's got this move up here, pull back, move up. So what we've done is be a bit clearer on this chart that we've made a low here. We probably retested lows, okay, from move up, pull back, and we've taken out this high. So that's sort of a key thing. So on the weekly, the bigger thing that's in play is rally, pull back, retest, and fail, and we've got a bigger rally, okay? And now what we're doing is sort of retesting this zone. So to me, I actually don't mind that on the weekly basis. What you've got is this inside level starting to hold, okay? And I'm anticipating that this is probably that zone we were just talking about. Let's go back to a daily. So does that make sense? We've got, the bigger picture is we've come off this zone, we've had a good extension higher, a lot of this leg has been flushed out, so there's a good chance that we're going to have that secondary move up. Okay, so if you're breaking down, I generally break down trades into two moves. You got that quite an obvious move up, which catches the earlier birds are jumping in. Then you got your first pullback, then you have that secondary move up or down, which is everyone else waiting for that first pullback and they're jumping in. So this is kind of your first pullback on a major scale, if that's the play. So go back to a daily, and yeah, so these are those levels we were just talking about. Where am I? You know, through here, all those levels, those inside levels. Okay, so we've got, is it? Let me just get that back. Yep, okay. So this here is that bigger level I was just talking about. Okay. And you can see it sort of traded up to there before, backed off, went through it, retested, failed, back up, failed again. And now we've sort of got trapped in the bigger range and the smaller range. Whether we're going to be in, I'll just click all this up, whether we're going to be in this big range here, or whether we're going to hold and break out of that range there. But either way, because of the weekly, I'm banking if we hold this, we can start to lift and be up through 216, because that weekly doesn't look too bad at all. So I'd be whacking that there for now. I'm just marking up all my levels. Okay, so I've got this level is something, and if I'm going to get long, that's probably going to create a problem sooner or later. This will create a problem sooner or later at 238. So all the levels are pre-done in advance. And I'm really just waiting to see, are we going to break down through here? Because at the moment it's still contracting. Contracted, reacted, contracted a bit more. Are we going to start building a major higher low off here, off this level at 166 in respect to 124? Or are we going to continue way down, or is this going to be a lower high come to play? Okay. So I'm anticipating, just by looking at that this level is going to hold, and we're going to start to do this kind of action. If we start to do that on the daily, if I get something like that, especially if we come off this level without a pullback and we break out of this contraction down, you either, once you start breaking out of that contraction down, you're either going to go sideways or up. All right, if we started to go up, pullback, I'm looking at my first pullback, and then I'm going to buy the break, and then away we go. Okay, and then that's where these levels that I've marked up comes into play. What's going to happen? And we're going to find some selling pressure up there, or is it going to continue straight on through? All right, so yeah, that was yours there, Ben. So that's probably all I've got time to get through. Yeah, well, that's it. I think we've covered everything. So hopefully that was making a bit of sense, guys. I'm probably all out of talk at the moment. But yeah, if you want some more information, just email support@tradesetup.com.au about some anchors, and I've probably got some presentations that I've done in the past that I might be able to send you some stuff out on, or try to do a presentation and really drill into the anchors a bit more and why they're important a bit better, and how I base my trading around it a lot more. Let's just go and see the. You probably find that there's some good anchors on the Hang Seng at the moment. What is the Hang Seng doing? I'm on the daily chart. That's why it's not showing me anything. All right, so that's today. Yep, that's today. So look at this here. We're flushing out. We flushed out these highs, faded. We've got a little minor lower high in place. We've gone down through the anchor. So we pressed up, pulled back, up, pulled back to the anchor, retested it, gone up, got a lower high coming into play. So as soon as you get the lower high and the anchor's being retested, there's a good chance that the anchor's going to be retested or broken again. Okay, we've broken through. This is a prime. If you could trade, off this level, this is a lower high, potentially through here, and you've got a short on you, it come around and reversed on you, but then you've got, this major lower high coming into play and it's pressing down. So you've got some nice little trades off there. This is the zone I'm looking at, potentially in here. So yeah, anyway, that's the Hang Seng. Yeah, fantastic. Thanks, Joseph. All right, guys, I'll call it a day there. But thanks very much for joining me. Any questions, like I said, feel free to email through to support@tradesetup.com.au, and great to leave a like if you can. All right, guys, I'll speak to you again soon. Cheers. Bye.